Just a quick question here from Mike asking for how long should we be holding onto news trades? Mike, first of all, thanks for the question. So let me start by saying that knowing exactly when to take off a trade based on a news event, it's largely going to be based on the type of news event that you're trading and the type of impact that you're thinking that news event will have on the market, the sustainability of that event, if that makes sense. Now, knowing exactly when to let go of a trade and when to hold on to it is more of the subjective parts of trading, and it is usually influenced by a couple of factors. So let's go into that. When it comes to day trades, for example, generally speaking, we want to be in and out of the market when it comes to day trade. So, for example, if we're trading something like a risk sentiment, a short-term risk sentiment-based trade, we know risk sentiment can be very fickle, it can change very quickly. So that isn't really a trade that you'll be wanting to hold open overnight, especially if the medium-term bias for that pair isn't really aligned. However, let's say that you are trading a risk sentiment-based trade, but the reason for the market trading in terms of a risk on or risk off tone is a very, very, very strong reason, a very strong catalyst. So let's say a country has declared war on another, for example, and there's massive repercussions. That isn't something that you'll just keep for a session. That can be something, if you're jumping in on that news, that can be something that you can ride out, let's say, for a session or two sessions, and maybe a day or two or three. So it really does depend on the impact that that news will have. If it's just a regular day trade based off just a regular news event that came out with a big deviation, that isn't really something that you would want to hold open overnight, especially, as we said, if that overall fundamental bias for the two currencies isn't really aligned with that trade. Now, knowing where to take it off in terms of a day trade for just a normal day trade can be determined by the very, very basic technical strategies out there. So you could look for the next significant psychological levels. You could look for support and resistance areas. You could look for ADR levels. You can look for Fibonacci expansion levels, a couple of areas that you can look to take off the trade at a good and reasonable area if it comes to a day trade. If you don't reach that level, of course, and it pulls back or it just goes nowhere, then the day trade is normally going to be something that you'll just close out at the end of the session. Now, that is for regular day trade. So when you get, like we said, a massive sentiment shift in the market, an event that nobody expected that could happen, that really impacts the markets, and it's a very sustainable move. Now, that will be a day trade that you can look to consider holding open a couple of days if the sentiment shift is strong enough, obviously. Now, turning to something like swing trades, ideally, you would want your bigger picture bias and your short-term bias to be aligned for these type of trades. So imagine that we are, let's go to a higher time frame here for the Aussie dollar versus the US dollar. Let's use this as an example on the daily time frame. So let's, for example, say that we have a downside bias in the medium term for the Aussie dollar versus the US dollar. So we expect the pair to go down. But the short-term bias has caused the pair to now rally quite considerably, right? In the short term, we've had 2 straight weeks of moves to the upside in terms of equities, and that has really supported the high beta currencies like the Aussie, and that has seen the pair rally quite considerably. Now, we know our bias is still to the downside, but we want to wait for the market to have a reason to sell the pair again in the short term and use that as our catalyst for entering that trade. So those trades, you could either hold to the, let's say we get a catalyst today, and there's a big strong catalyst to the downside. We have a strong reason to sell the Aussie versus the US dollar. Now, we can take that trade. Knowing where to take it off, you could either use the swing areas again on the major time frames or the higher time frames. You could use your major swing levels, your next big psychological levels, your fair value areas, your Fibonacci expansions, a couple of technical strategies that you can use to know when to take it off, or you can just trade it very simply based on that short-term sentiment, right? So let's say your downside bias or your bias is still to the downside, you get a short-term catalyst and you short that currency. You basically hold that trade until the short-term sentiment changes again. So the market gives you a reason to close out that trade, and then you can close it out. So there's a couple of ways to look at it. But as I said, it is very subjective. It is really subjective based on the type of news that you're trading. For example, in terms of a swing trading idea, you're not going to be wanting to trade a swing trading idea against the overall bias anyway. So it's going to be something that you want to wait for that short-term and that medium-term bias to be aligned to trade. But it's also why it's so important to always keep your fingers on the pulse of the market to make sure that you spot those sudden changes for opportunities in those more swing trading as well as those day trading positions. So I hope that helps, Mike. If there's any other questions, just make sure to let us know.